Well, we knew volatility was going to get wild this week. Tesla is up after a bad result and Meta's down over 14% at the time of this recording in after hours trade. So vol is clearly here to stay, and dark pool activity is also starting to heat up around this zone. Are they buyers or are they sellers? Today we'll talk about that along with the CTA positioning and the updates to those particular records. Meanwhile, Meta looks to be opening at close to its previous gap fill. And could this be an opportunity for everyone out there in the markets? Today we talk about what the bonds market is telling us, what's in store for Microsoft and Google in some massive earnings, and one of the world markets starts to heat up big time that we've been looking at. But are there actually quite a few underneath the hood that are starting to improve? Join us as we cover stocks, commodities, and cryptos, because there's a lot going on in these markets right now. Well, welcome back everyone to The Daily Show. My name's Tom. Today we cover the macro, the data, the lead indicators, and the hottest charts and why they matter to each and every one of you, whether you're a trader or an investor. If it's your first time here, then subscribe and smash that bell icon if you love markets like we do and you want to better understand why they move and how money flows throughout the world. It's really interesting, so I'd love to have you here. Let's talk about the biggest relative strengths right now because, of course, as many viewers would know, we've been very strong on gold, very strong on energy, and very strong on minerals and metals recently. They have been up there, but it may come as no surprise to also see some of the markets improving where we tend to see those mining stocks. Canada and United Kingdom are coming through in a big way. And it turns out that some of the best leaders at the moment, other than mid-caps in the S&P 500, have actually come from other countries. Is this trend to continue? Well, take a look at the NASDAQ. It was on top of the world late last year and all the way into the start of this year. Now it's down 6 places to number 9, and it's actually only up, 2% for the year so far. Pretty much Treasuries, one of the worst markets, is actually performing the same for the year so far. Now, that could be an opportunity for all of us around the markets, but this is a chart that I think every one of us should have moving forward. The Vanguard total stock market versus the Vanguard FTSE All World US ETF. Notice that it's been sideways since 2024, and that if this drops through the bottom, what it's telling you is money is flowing throughout the world as everyone starts to get a little bit more excited about the recovery or whatever we've got going on right now. Now, remember, the US is the ultimate market. There's no doubt that there's tons of AI, tons of amazing technological improvements here. But when you're talking about metals, minerals, and all of those types of things, it doesn't make up much of the market. Some of the areas in Latin America, some of the areas in, of course, the world are starting to look really, really attractive. And this is starting to show you that flow is coming through. There are some other reasons as well, though, I think this could be occurring. Have a look here. This is retail positioning on CFDs over the last 24 hours. And what you'll notice is the US 500, everyone's pretty mixed. We've basically got equal numbers of bulls and bears, and that shows confusion in the markets. It's pretty similar from Wall Street's perspective, the Dow, but have a look here at what we get when we go into the overall market. The FTSE in particular, one of the strongest index ETFs, 79% of retail traders are short on that right now, and the DAX has been improving strongly, and 77% of people are short. They were the kind of stats we were seeing for the US 500 and, of course, the Dow during that October into February and March rally. So let's have a look at the S&P 500. Should we be going, yes, this thing's absolutely back, the bulls are back, it's all good? Well, after a negative 14% on Meta, I think you can clearly see that vol is big this season. And I think Meta is going to give an opportunity, but it may still even drop a little bit more into that gap. There's going to be a really good watch here, and we're going to look at it pretty much every day along with Tesla as we're trying to ascertain who's really winning the battle. But fear or strength models, this is important, and advanced decline lines are also incredibly important. If we start to see this tick to the upside and we see more advances than declines, then we're clearly in the future of the bull market. If we start to see this continue to tick down, then you need to start thinking about the 50-week moving average as being that correction path. Remember, we're at one of the most important levels, the 20-week moving average at the moment, and we always expect a bounce there. But if this gives way, capitulation or a waterfall effect can certainly appear in that next level. And we'll look at those on the charts if you're new here so you can see where they are very, very soon. Risk on, risk off ratios, clearly something's happening at this point as well. We've had a bit of risk off. We got a little spike over that 20 weekly. If this drops through, then of course, again, it enables that kind of waterfall effect. So most things are showing that we're finding some form of equilibrium in the markets. Meta certainly may be shaking that up, but if Google and Microsoft report okay, but not in line with the market expectations, get ready for a sell-off through that 20 weekly and, of course, a decent sell-off in general. A nice 10% correction would be fantastic right now for overall a healthy market. And shedding a bit of the hundreds of billions off the FANG stocks, or in this I call them the FANG stocks, off the MAG 7 stocks, they would be also pretty good. I'm starting to show my age there, guys, when you start saying FANG stocks. Bonds versus commodities and stocks in general, what are they telling us? Well, usually bonds kind of give us a precursor of markets. Now, it's been interest rates up and overall bonds down in recent times, and that's actually fairly normal. If bonds start to freak out at a rate that's higher than the interest rates up, that's when you need to start freaking out. I do have a little bit of an indicator I can show you later on that tells you what really is going on in the bonds market, and it might surprise you. Also for the bulls, should you be still looking at this saying, yeah, no, things are still really good? Well, frankly, probably yes. Since 1940 to 2024, when we have the first quarter and the second quarter both positive, which just basically means we have two 10% back-to-back quarters, that is really good for forward 60-month returns. Now, this is wild. 92.6% average and 100% strike record. Holy moly. So that is really huge. And if it holds up, which it may, this is going to be a wild couple of years. But I do caution people to be thinking about this as if we do end up getting breakouts and things get wild, you will be tempted by the song of the siren, and that is to take massive leverage in markets. I'm pretty sure leverage in markets, which remains quite low, by the way, is going to increase over the years by money flow. And if that does start to really get into those topping levels, whether it's 1 year away or 2 years away, yeah, we all know it doesn't end well. And I've got another chart that's showing you there are similar signs here that are showing signs of late cycle investing. And that's when markets go the most crazy both ways. But at the same time, people get absolutely euphoric. And we're already starting to see the signs of that in the markets. You might think euphoria is there now, but remember back in 2021, and remember back, if you ever remember looking at China back in 2015-16, that was euphoric. They went absolutely wild. Now let's go over to what's happening. Are we in a bullish overall trend at the moment? Yes, we're not seeing the fear that you would usually see from 10-year treasury notes. We've had strong bond auctions. Most of the time, that's usually a good sign. And of course, the world seems to be expanding at this point, even though you go, well, how's that even possible? Obviously, there's a bit more juice in the back end than we ever thought. When we have a look here at breakdowns and breakouts based on bonds, recently we used a similar chart to this to actually show us that volatility was on the rise. That has still been on the rise, but I can tell you over the last 24 hours, it's dropping off a bit. So clearly the fear of the unknown, which is what really freaks the market out the most, is starting to drop off. And now it comes to the earnings. And with Meta starting to show, signs of cracking just due to mostly overspend and maybe some metaverse stuff that the market doesn't like, all of these things are starting to lean on that 20 weekly moving average. So if that gets taken, you'll need to be paying attention. What about underneath the hood? Well, I've got some of the market sectors here, and utilities, staples, and of course, energy and healthcare are all at the top of the list over the last 5 days. Now, I've loved utilities recently, and I must admit, I generally get rid of it in the middle of April, and maybe this year was not so good to get rid of it in the middle of April because it's kept going well. But this could tell us again about late cycle investing. I think the most important factor is, though, that when you look at regional banks and banks in general, they are still leading. And what that means is that banks are incredibly sensitive to changes in the economy. And obviously, when things go bad, especially financially, banks get absolutely hit. So because they're going up, that is a decent sign again for the bulls. And especially if we keep correcting here in only the tech stocks, I think that is a very good correction because that's exactly what you want to be seeing. But financials holding up will be important. Last 24 hours, mostly the sell-offs were in Meta after hours. We'll see how that ends up affecting the market. And of course, NVIDIA. So just before we jump into the charts, we take a look at all the key levels and the big zones you need to be watching. I want to say a big thank you to the sponsor of today's video, which is Tiger Brokers. And they're back in a big way. Now, one of the things that I always like to work with when we do Tiger Brokers is getting additional value for you guys, the viewers out there. And one of the things is that I've managed to get for the Australian viewers out there is an additional US $30 worth of NVIDIA fractional shares when you deposit Australian $2,000 over the first 7 days. You can also take advantage in Australia of a couple of other big offers they've got. 7% per annum. Of course, it's up to a fixed amount of money over the first 150 days if you hold it in there. Read the T's and C's. And an additional US $30 worth of Tesla. Now, why do I like Tiger Brokers? Well, not only have they won many of Australia's most prestigious awards over the last couple of years, but they constantly update their software. And I mean, even since last time we focused on them in the show, they have added so many things. One of the biggest things for the Australian viewers out there has been the access of the HIN. So, of course, as you know, as ASX viewers, HIN is a big deal, and they've now got it inside their platform. So if you want to gain access to that along with competitive pricing, which I think is incredibly competitive in the Australian aspect, this is somewhere you might want to be looking at doing it. Now, don't worry for everyone else that's watching right now. If you're around the world, we do have a couple of different deals around the world for you. So check it out. The link's in the description down below. And the pin message for the Australian viewers will give you access to some of these amazing deals. We'll be looking more into why the platform could be right for you over the next subsequent videos. But for now, go and check them out. All right, let's move over now to the S&P 500 and take a look at who was winning over the last 24 hours. So one of the big things was, of course, we moved back up to the daily 50 moving average, which sits right here. Then we also had an anchored VWAP, and we had a huge call wall, which we'll look at in just a moment, stopping this market and actually acted like a massive resistance point throughout the session. Let's go down to the smaller time frames. You'll notice it kind of sold off that 50-90, sold down, rallied back up, and I would say that no one really was in control of the market for most of the session as it was kind of neutralizing around the board. If I was to guess though, and this is one of the things I mentioned to our Market Masters Club as well, when I saw a structure like this would have been a pretty good sell. Now you would have got lucky because of course ultimately Meta is the one that ended up taking it down, but that's actually a pretty replicable sell level. So let's move over to the futures and take a look at how it looks here. So you'll notice again, it was market movement, market down, market up, and then of course Meta came through leading into the sell zone. Where do we have the options now moving forward? Well, we still have the VWAP call positive gamma level sitting at 5100. So that's still the big resistance where the bulls absolutely win. If the bulls push it through, I think 5200 could be the next zone. And we also have the 5025 bear level. Now we still are in what we call negative gamma. So because we're in negative gamma, if 5025 is taken due to maybe bad Google results or bad Microsoft results, that could start a cascade effect of futures needing to be hedged off and, of course, getting through the 20 weekly moving average. We're in a very dynamic market, which is great for traders. For people that entered into shorts up here, I think there could still be more left for you because, of course, at the moment, the market sentiment could be turning a little bit negative due to Meta. But for buyers, if you're wanting to get into this market, you're saying, you know what, I'm very happy with how I've seen things improve. Again, that 55,000 to 5025 is going to be the defended zone of the bulls. So this is the area for the bulls to look at. Underneath here is where the bears take control and negative gamma starts to take over. Let's have a look at the overall negative gamma situation. So as I mentioned, the 5025, the 5,000, have a look. That's where all the puts are at the moment. The 5100 here on the 26th, that's where all the calls are. So we're clearly trapped within this zone, waiting for all these earnings results to come out to make that next big decision. And a lot of people are saying, oh, that's really wishy-washy. You could be up, could be down. Absolutely, it could be because you're trapped within two gamma positions. Generally in trading and investing, well, investing's a little bit different. You look for key levels such as the 20 weekly moving average, such as the 50 weekly moving average to do your investments in the stocks that you love. But from a trader's perspective, you've got to figure out when the market is moving to the next level of equilibrium. So let's say you go from 5100 and you break that zone, then it becomes statistically more likely you're going towards the next level. When you have that statistical advantage, you understand the options move, that's when it's really important. So if you want to find out more about those things, of course, you should check out our courses, but also watching the daily show. I got some really heartwarming messages from you guys this week. I won't mention names, but one member, absolutely amazing. I'm going to reply to you after this video. And basically they went from being, pretty bad in the hole. I'll disclose that they were down probably around $100,000. And by effectively looking at abundance mindset, by looking at the market, by being generally very optimistic about their overall results and what they were looking for, they were able to claw back that money in a safer way than usual. Now, that's an incredible result, and that person should be very proud of what they've done. because they've managed to do it in a more methodical process. And I think that's very important. If you don't do it in a methodical process and you're just YOLOing all over the place, really you're gambling. We all know how that ends up. Not very good for most people. Let's look at the NASDAQ CTA positioning now. A little bit of an uptick. They obviously like the weekly 20 moving average a little bit as well. It's not enough to write home about. It's very normal for them to do this. We've seen it before. Weekly 20 moving average was just here actually last time. They bought it up a little bit. So a little bit of an uptick, not enough to write home about. Advanced decline line, CTA is coming back in the positive side. That'll really tell you the bulls are in control, plus positive gamma. SPX, same thing, a little bit of a pickup. And gold continues to get dropped here by CTAs. It was very heavily positioned. So again, a little bit of a sleep for gold. Could be on the horizon. And I would be all in for that because I think even though I'm very bullish on gold, it does need to have correction periods so it doesn't do blow-offs. Let's look forward now into earnings. So one of the things a lot of people have been discussing is Russell 2000. Is it still cheap? Well, it's moving into the not so cheap lines. It's basically now on pretty much the average. But the forward PE here is sitting at 15.75, which suggests that we should be looking at a 9% annualized return for the Russell 2000 over the next 10 years. Now, that's still a pretty damn good return. So the Russell 2000 is still looking pretty interesting into this earnings season. But here's the chart that I want to talk to you guys about before. Real estate agents and brokers employed in the LT chart. Now, I know that we've got quite a few people in the real estate business out there, and I'm sure there is clearly increased competition out there because, you know, if you were a real estate agent back in 2014, it might have been tough out there, but there weren't so many of you. Now have a look. Oh, there's a lot. And what this usually brings is speculation. So clearly, if there's a lot of real estate agents, there's a lot of spec going on. And last time we saw spec like this, we were in this area. Now, we all know how that ended. So this could be a chart we may need to watch as well, because if real estate agents start to drop off heavily, that kind of shows you the land boom is over. And if the land boom's over, then we need to look at the debt and then we need to see what's going on there. But for now, good times keep rolling. And it looks like the real estate and in general, pretty much anything to do with that market is still going gangbusters. In particular, home builders, absolutely out of control right now in the US. So election year drawdowns, can we expect upwards of 10%? Yes. Is 5 to 6% still pretty damn good? Yes. So 5 to 6%, which is what we just did, is still a very decent pullback in overall election years. -10, if we take out the outliers, being these two, is kind of like the average that we usually expect. So it can happen in these types of times. And if we were tracking exactly what tends to happen in election years, then we would expect that little bit of an uptick we just saw. And then maybe into May, we might finally get what they call the sell in May. Now, sell in May is actually not that statistically likely over the last decade, and I think you'll see a ton of videos coming out saying sell in May doesn't exist. Well, that's true, but in election years where we've seen such strength at the start, sell in May did exist. And it wasn't a huge sell, it was mostly just kind of a sideways action. So I don't think investors should be terrified, but this is backed up by every metric we've seen so far in terms of correlation matrices, in terms of anything to do with the overall election years, which we're tracking basically 12. I'm sure you guys are sick of this, but 12 and 1976 the most closely. And both of those had exceptionally good overall returns after. But they did have kind of like a 3-month struggle. And of course, we're 1 month into that. It may be different. We never can say these things are 100%. But so far in the price action, we've gone 20. We've bounced. We've come down. Now we make the decision whether the bulls want to push a new high. If they do, that could be all we get. If they don't and the 20 weekly gets taken, I'm thinking 50 weekly is a real possibility here. Let's jump over to the earnings coming up. So Meta was there, and mostly the story from that was, as I understand it, they're obviously plowing ahead with the metaverse, which the market doesn't like. They're also plowing ahead with a pretty decent spend. I think it's $5 billion more. I'm not concerned about that. Obviously, the spend is there, but really Meta is still a cash cow. Microsoft and Alphabet are up next, and those expected moves are in the vicinity of ±6 for Google and ±5 for Microsoft. Historically high moves. So this earnings season is bigger than ever before. And Meta, we will look at it in a chart in just a moment. Also, I want to mention that there was a huge dark pool transaction that came out of nowhere just before the Meta announcement. So as we were rallying up in the market, a monster came out, and this is the Bull 3X shares fund. Is it a close? I don't know. But it is a massive trade. So a huge one right just before the Meta announcement came through. Let's now take a look at the charts. We've got the VIX sitting at around 16, which is still at overall kind of bears in a little bit of control of this market. Underneath 15 is historically a very big turning point for markets generally. So VIX at above 15 is a pretty big deal. As we mentioned, our bonds kind of indicators are showing us here that while high yield has dropped off and it's bounced back up, in general, the usual corporate market, when you take yields out of it, when you take all of those things out of it, it's kind of just like hovering around the zone. So if this then fell through, then you can start to be a little bit more terrified about the markets. But so I think bonds are relatively stable, all things considered. Let's move over to the S&P and liquidity. So this is central bank liquidity, just majorly hovering around. Remember, if this starts to drop off further, it suggests that the chance of a sell is higher. But this drop, as we've already demonstrated, is something that normally happens at around this time in the year due to some of the Fed's control tools in the markets. What about US yields? Still very high, 4.65 for the 10 and 4.93 for the 2. So we're still just looking at basically 1 to 2 rate cuts. That's it over the next 1 to 2 years. Dow Jones Transportation Average really took a dive here in the last 24 hours. Again, that's a warning sign. You hit this resistance, which we spoke about. It then sells big time in comparison to the market. So that's a big deal. And therefore, we need to look at XHB, which is home builders. When these types of markets start to dive a little bit, you can again start to say, well, is there something a little bit more murky under the horizon? Just keep an eye on them. They are certainly both still, I would say, a little bit down for Dow Jones, and I would say neutral for the home builders to up. Dollar index still covering it, but it's just floating around. I do expect over the next kind of 2 years, like 1 to 2 years, that the dollar will end up being lower. I really do feel that's probably possible. But for now, we're open to both terms. We're at a res, there's no doubt. If we break to a new high, get ready for the dollar to go super bullish. If we end up starting to fall down and we get through 104, I think that's probably the topping of yields potentially. And of course, the dollar may also weaken off that particular point. Copper, still very strong at a resistance point, but still looking at that with positive eyes moving forward. Now let's move over to gold and the 15-minute chart. So we mentioned the possibility of gold coming down to a few areas. So we're at the most traded on the way up. We've taken a bit of a change here. This is where the bulls have to recommit. Because I'm a little cautious on gold, I think a bull would be very excited if that was done. So as it moves through 23.22, I would say we're moving up. At this point is certainly where I expect bulls to try to defend this market. But if it does take a new low, we've got to reset everything and look towards another fall off. And with CTA starting to dump their gold positions, that's also something you would want to take into consideration. Also take a look here at the daily. Big rejection week after that big strength week kind of neutralizes itself and suggests that gold's still a little bit weak. Some things that you could look at would be Fibonacci retracements to the 61.8 retracement, or of course this very strong bull level that I've marked at 21.72. That would be freaking gold traders out, but I think more than healthy in the market. US oil still in the good bull zone, still selling off the 83 area. I like the great bull zone. I don't know who's winning this battle right now. I guess the overall trend's up. The short-term time frame trend is down. So bears on the small time frames and bulls on the big time frames for oil. Bit trapped. Now let's move over to the Tesla trade, and I'll just grab that fib back out again. So you'll notice it came back up to the 61.8 fib, so the golden pocket got hit, and then it retraced, and it ended up as a long leg doji right on where we have support becoming a resistance. I do think this is a pretty pivotal point for Tesla, and it could be a turning point because it held at 12% plus. That's pretty strong. It got big volume. That's pretty strong. I expect volume to maintain for quite a few days, and we want it to do that. So what I would love to see it do is something like this. And then if it did that, I would say the bottom's in for Tesla. So as it goes through that previously most traded zone, that would be the bottom in for Tesla. Now, if Tesla does bounce, you'd have to wait for that. So there's quite a few alternatives here, but yeah, things are starting to definitely look a little bit better. And you might say, well, it's just words. But do remember, words are powerful and it can create hype. And remember, the word AI is the most powerful. So at this stage, yeah, they haven't really fronted it, but Tesla's done it in the past in terms of fronting a product. And I think humanoids in particular is going to be a storyline you see in about a year's time, 6 months' time, which everyone's going to start rabbiting on about. So don't be surprised if Tesla might have just found its temporary low. What do you think, though, in the comments down below? You've got to be open to both ends. AAPL, a little bit of strength back at that zone of support becomes resistance. Too early to tell on this stock. Semiconductors still showing a little bit of weakness, still at their overall bounce level, the first bounce level being the 20 weekly. You can see here SMCI in particular, copying it a little bit in the last 24 hours. And Nvidia also selling off pretty aggressively. In fact, from the open to the sell-off, that was about 5.62. Now, for Nvidia traders that really want to be in, is this a zone for you? Well, you'll notice that, again, it's at around that 61.8. So some people that would be looking for the bounce, they would say, you know what, that's good enough for me for my first entry. If you're thinking Meta, maybe Google, maybe Microsoft, one of those don't perform, then 680 is the ultimate level for this particular stock. That's the level of, filling a lot of gaps and getting into quite a lot of excitement. So for now, it's a dead cat bounce. It came off the support resistance. If you want to be more sure about things, then you generally would want to break out of this supply, and then that begins the next rally. Advanced decline lines will also be coming with you at those points. Aussie 200, just hit the 20s, coming down a little bit. Still quite strong, obviously waiting for the US lead. And this market, oh, wow. China market, absolutely on fire. Everyone is starting to probably look at it now, I would think. Inverse head and shoulders, active as of today's close. In general, very strong market. We've been talking about this. Tencent leading the pack. AI, that's the kind of storyline, I guess, that's going on. And negative sentiment is out of control. People are so negative on this. I've seen so many articles about how it's the end of the world in there. Remember, the stocks are down 80 to 90%. So this is pretty strong. Very strong momentum pick off exactly the type of path I like to see. And I'd like to see this thing go into 18,000. So very impressive. And it just shows you having that abundance mindset going throughout. We're seeing this through so many markets. If you look at the UK 100, it's not just that particular market. If you look at the UK 100, it's also broken through and been up in recent weeks since we announced that weekly closure. So just lots of different markets out there for opportunity. Even the German 40 doing better than the US market. It's because this isn't a broad sell-off. What it is a sell-off through tech. And all of those Mag 7 stocks have been sold. And that's a good sign because, again, it's part of a healthy market. It's not to say it's all bearish, but it's the type of thing that you do want to see, unless you're leveraged to the wrong side. US 2K, still finding a little bit of bounce, actually holding pretty well. So when you look at the Russell, it's holding up pretty well. And when you scroll down, you'll notice it actually did break out our 1980 level, which suggests that maybe even pullbacks could be met by bull demand. I think 1950 could be a good area for bulls from a technical zone to regain control of the Russell 2K. Broke the downward trend line, broke quite a few things. And I'll just see here if there's a trend line through the top here. There is, but it's nowhere near. So we'll find out. US 100 now comes up, hits the resistance, which we mentioned. Our red box sells off. Meta did that. Of course, a new low. Watch reaction here. We remain very strong at 16,325, which should be that 10% correction. And if you actually look at the NASDAQ, you might not think this, but from the top to the low here, you're getting an 8% discount. You're still getting a 6% discount, which takes you all the way back to January. And in fact, down in those lows, it took you back to December of last year. So there's not as much gain as you might think in the market when you take a look at it from that perspective. Let's have a look now at the old Bitcoin, and the bulls could not take control. It got pushed down again. It's tough, guys. It's a really tough one. I mean, the trend is up. The sideways action is here. And why I say it's tough is because we know that this supply continues to act as supply or resistance, and the market has been pulling back. Yes, in here is where the buyers would need to recommit, but it kind of gives you those, I'm just wondering whether we can get that 30% average to the downside. Look, you take control of this, you're pushing positive, and no doubt there's a lot of positivity. I'm going to have a look on the weekly to see whether we've got some commitment of traders coming in. If they start to look at the buy end as well, similar to CTAs, that could be a very good sign, commercial hedging. So we'll check it out. But Bitcoin, murky at the moment. In terms of news, we have Friday's news being the core PCE price index that we need to watch. And as always, if you want to keep on top of all of the biggest things going on right now, remember to subscribe, hit that bell icon. Thanks so much for watching, guys. Follow us also in the links in the description down below. And of course, check out the sponsor of today's video, which is Tiger Brokers, especially if you're from Australia. So many great little opportunities in there and some amazing platform extras. You'll be pretty impressed when you open it up, whether you're on mobile or, of course, desktop platforms. Thanks so much, guys. Bye for now.